Big time trades going down. This is London with Bitcoin Spike and VIP Trader. If you shorted, I brought you that information. I want you to hit the like button. If you saw that specific call of mine, congratulations. Yo, VIP, what's up? Shout out in the comments. Let's go. In terms of that channel framework to the upside, you know we had that throw over, boom, about a 10% move right now. I want to remind you the longest standing crypto exchange is BTCC. It's not a Binance FTX, guys. It's not Bybit. It's BTCC. The link at the top here will give you $3.5 thousand. It's a beautiful exchange. I bring it to your attention now to take advantage of the next trade that we bring the technicals on. In terms of that, congratulations to the VIP. I want to discuss a pattern framework, and is Bitcoin about to complete to the downside, or is she done with a head and shoulders pattern? Let's pay attention. Head and shoulders pattern right here within the structural framework. I say within the pattern framework of the specific channel to the upside, Bitcoin has been expressing quite a few complications in terms of head and shoulders patterns. I want to draw this the best I can. Shout out to all the VIP. It's another VIP weekend. Volatility is the name of the game. Let me go ahead and draw this complicated head and shoulders pattern. Essentially, it's a nice channel framework. Now, what I brought to the attention of the VIP is very important. Now, when we're looking at the completion rates, I also have something important to talk to you guys about on the NASDAQ. By the way, the NASDAQ may be front-running Bitcoin. I'd pay attention to this whole video. That's what I would do, guys. Okay? In terms of the specifics, we're going to look at the amplitude move of the channel, and it's going to coincide, you know that, with the head and shoulders. That's included perfectly within that channel. Let me bring up the trend-based fib extension so we can take a look at the amplitude, the breakdown. Where are we right now? We've just surpassed the 50%. Pay attention. We just surpassed the 50% target. Essentially, that means 50% of the amplitude of the head and shoulders, or of the specific, watch this, guys, 50% of the amplitude of this channel to the downside has already been completed. Why or how is that relevant? I'll tell you how it's relevant, because we have, as a matter of fact, targets and probabilities associated with those targets. That's the best way for me to explain to you, is that there are completion rates in line with either the 50% completion, which is a 70, what is this? Actually an 80% probability you would reach that 50% target, okay? Getting to the 100%, or that full measured move of the target, the full amplitude is actually a 55%. So you're looking at 80% likelihood that we go to the level we've gone to now, versus a bit over a 55%, slightly favoring a move down to the 100% level, which is right at about 16,100. Very important, okay? So when I bring a chart to you and I show you we're at the 50% level in terms of the completion, those are typically the higher probability trades, okay? Absolutely. We focus on Bolkowski. You all know that. Bolkowski, Encyclopedia of Chart Patterns, the most extensive empirical data study done on the markets. 150 plus thousand charts are included, patterns are included in that study. We love that specific book. It's VIP know-how. Now, we have a few different patterns ongoing. I want to bring to your attention the NASDAQ. Pay attention to the NASDAQ. Do you see the formation that we're in on the 4 hourly? That expansion. You see that expansion. I want you to note the fact that the NASDAQ has broken down from the expansion, okay, from that reverse triangulation. You see that it's included currently in a bit of a troubling bear flag. And in the overall context, it's also within a specific descending wedge. If you don't know what these patterns all mean, I want you to continue to focus on processing the information from New York Institute of Finance. That's what we focus on. Just keep at it, guys. Keep repeating the descending wedge, the ascending wedge, the overthrows, the ascending triangle, descending triangle. It will become fluid. It'll become natural. Just wait. It'll become natural. You can do this. I know you can. In terms of the pattern pickup right now, A long support would be expected, but I brought up the NASDAQ because you can see the specifics here, that reverse triangulation. You see that reverse triangulation right there, and then boom, on Bitcoin, taking a look at the 4 hourly, taking a look at the 1 hourly, you just see, yes, you see that same pattern framework as the NASDAQ. So the NASDAQ having broken down, there's an argument that the NASDAQ has front run, okay, has gone ahead and front run and potentially shown where, and this is a dangerous situation. You typically want a lot of homework done on these types of predictive correlative events, right? It's going to predict and it needs to move in the same direction, front running, okay? So these are kind of advanced concepts in TA, you know that, but I do bring them to your attention because I know you're a very advanced group. VIP is number one. I know you're advanced enough as well. We talked about speed fans, right? We've spoken at length about speed fans. If you're not in VIP, you need to join. We're always recruiting the number one traders or guys that want to be the number one traders, men and women who want to be the number one traders. In terms of the low to high, we really want to be surrounded by the best, guys. That's the bottom line. From the low to the high, we're going to draw in the speed resistance span. You guys know that. We're going to double click on the speed resistance span. We're going to be looking at the 1/3 and 2/3 levels. We're going to be putting in 0.33 and 0.66. That is in line with the New York Institute of Finance, where Wall Street goes to school. 0.33 and 0.66, what does that mean? That's 1/3 and 2/3, okay, of the amplitude of this move. Pay attention, guys, you got this. The amplitude of the move from the low to the high, boom, we box that off, and essentially that speed resistance span is going to give us a demarcation at that 2/3, or really the 1/3, and then the 2/3 line. They'll reverse it. They say 2/3 on top, 1/3 on bottom. But we want this box divided up into thirds, okay? We want this move from the low to high divided into thirds, all right? Guys, it's pro level stuff. You got to get there. Listen to this. You'll be looking at, if we go ahead and draw in a fib retracement, I'm going to go from the low to the high. I have marked out already here. Do you see the 1/3 and the 2/3? Do you see that in white right there? You guys see that? You see the overlap in terms of the intersection of that top line. Boom, that top line is intersecting the box formation, essentially that 1/3, boom, perfectly right there. You see that line being carried up? There you go. Then you see this next line right here with that Fibonacci that I've drawn in there. You'll see that very lightly. I always recommend you see this on a big screen TV, by the way. View this on a big screen TV. In terms of these two thresholds, these 1/3 measurements here, we see the intersection once you set your fib, your speed resistance spans, okay, and you're going to have to go to fib, but you're going to make them into the 33, essentially the 1/3 and the 2/3, okay? 0.33 and 0.66. I did a video on this. If you haven't seen the video, watch the video. But you'll see that we're currently trying to pick up on this last threshold. The probability would be the following. Just so that you understand what New York Institute of Finance will present to you and pro traders, will be that if this level is surrendered, there is a likelihood of a return to this bottom level, okay? That's going to be sub, let me zoom in here just a bit, that's going to be sub 15.8, okay? Probability is if we capitulate this level, we're looking at sub $15,800. But that's where we're at right now. And this is a zone of contention. The bulls are trying to step in. Our fire and ice is getting tested. I'll tell you how or why it's being tested. Essentially, anytime that we have pattern dynamics in play, I always ask you to incorporate those into fire and ice. You have to. That's our custom indicator. And you just cannot bully yourself in through, let's say, or bully a position into a throw over capitulation through support. Note it, okay? Anytime that you have, for instance, that or a head and shoulders pattern we just went over, if you have a target to the downside, don't sit there and fight through. If it's an accompanying, let's say, resource for you, fire and ice, and it's a great technical indicator, especially while we're ranging. But while you're going down to a target, right, you're going down to a measured move or a target, an amplitude carry down, don't sit there and ignore the pattern and say, well, I'm just going to use the indicator fire and ice. Don't do that to yourselves. Make sure those patterns, we discussed this last week, match up from the larger time frames into the lower time frames that you're on. And I will recommend again that you look at the daily, right? Those 4 hourly lines are critical. They're very nice. And the daily, look at the daily lines just so that you understand where's our fire sale. 8,800, guys. Are you prepared to operate at 8,800? Absolutely. Prepared to operate at 13,200 on the green byline on the daily. If you're trading the daily, you're completely relaxed. Everything's fine. You're not stressed. That's what I recommend the new traders look at, is that daily time frame, okay? Looking down into the 4 hourly, a little bit more comfortable. We've been hitting that green byline. We'd really like to get a taste of the fire sale line on the 4 hourly, and we'll always incorporate in the levels on the daily so that we're not overexposed even on that 4 hourly. This is London. In terms of the percentage movement to the downside based upon this specific breach, okay, of the channel formation, remember that we caught this at the top and the back. Remember the trade opportunity then. If you find yourself in flux right now, a bit torn, maybe you're looking at the MACD, RSIs, et cetera, and you're saying, well, it's not real clear right now. I want to encourage you that you may want to wait for the next clear, solid, big time entry, okay? These trades in terms of, let's say, a clear indicator, this throw over that we were in, that was a nice move. I know you won't forget that now. Don't jump the gun necessarily and get into kind of a gray area where some people are letting their shorts continue to run, right? Those profits continue to run in a bit of a speculative mode now. The heavier entries for shorts were along this level. And let's just talk about another reason why that was. And shout out to all the VIP guys. I do these late. We're setting up, we're building in 2022 and beyond, and we just do these late. I want to make sure we get as much of the market activity into the mix as possible. You guys know that. In terms of this specific feature, and I had mentioned to one specific VIP, we were talking about this, on the breakdown here, on the breakdown of this specific pattern, this is the entirety of this range, okay, with the preceding range above on the daily. But you'll see what we did. We had this triangulation feature. You can call that a few different patterns. I'll say from a complicated head and shoulders. You could call it a complicated head and shoulders. Okay, you could call it a roof formation. You could call it a descending triangulation. What's important is that we have gone back up to preceding level of support to confirm it as resistance, bottom line, okay? So when you look at that, we've gone back to preceding support, confirmed it, pop, right at that level of preceding support as resistance. That was a beautiful area for an entry of a short. It just was. Log that, okay? Preceding support tested and confirmed as a resistance, an overhead resistance. Boom, beautiful place for a short. If you didn't catch this one, guys, let's continue to watch patterns develop. Let's continue to, and I got to shout out talking about who caught what in the back or who did what. We got a big time trader. Jay Mack is a big time trader. And I know you're still watching, Jay. What's up, my man? And Jay wants to trade bottom line. He showed up to trade. The man can trade. My brother, what's up? Nice trades. Look at this, 345%. He caught the short. He caught the that's VIP, 345%. That's 712% on a separate trade. J Mac, nicely done. What's up, California in the house? What's up, my man? Great trades, J Mac. And just a pleasure to be trading with you. Nice to be in your trade group, brother. In terms of the move, honestly, at this point, we're going to have to see what the demand function is. Here, I bring up front run potential so that you'll be prepared if and when Bitcoin decides to express itself technically and follow the lead of the NASDAQ. You know, we're trading on the weekend. So I look at issues like front running, whether or not Bitcoin will front run the markets, let's say into the weekend and kind of retract, something along those lines, because we trade 7 days a week. That's a very important issue. And I'm studying that issue. I think you guys are too, in terms of what Bitcoin chooses to do and when Bitcoin chooses to do it, while still maintaining, let's say, that specific, let's say the overall pattern conformance, right? So we're at that lower threshold. Watch your fire sale lines. Be prepared to operate at lower levels when we're in heavy volatility. We're in some just unique times with FOMC, with Powell, with the hawks at the door, right? And we just are. We're in some extraordinary times in the market. It's exciting because we may get some extraordinary opportunities at lower levels. You guys know I want them. Lower levels. This is London with Bitcoin Spike. We're going to dig into the micro as we always do. I'll just remind you that while price is heading to the downside, there are trades, okay? Now, these are the situations where you need literally to mind your manners with the market, okay? Meaning you don't just hammer into longs along the way down when you are in that tight of a channel to the downside. It's bad manners, okay? It's just bad manners to do that. I'm going to tell you. It's not that you can't book trades the whole way down, but you need to be prepared. Jackie Chan hands, right? Jackie Chan hands, very quick. You need to get in and out on these trades. So we have a bit of a variable level of support along the bottom, mid-level function, very well defined, and an upper level of resistance. That's a channel line. We carry up that bottom line channel, and it's just a very standard technique that we would use. So we're at that 50%. We're at the maximum, and all I can say, let's say the max probability has been completed at 50% within the framework of this specific pattern, that expanding reverse triangle. Just remember, I noted that originally. We gave it a good run. You guys know that. We gave that pattern a good run. I let you know these are difficult to beat. You know that. When we saw this, I'm like, they're just difficult to beat. It's going to have to literally turn into a monster to beat this and continue to the upside. Those were my exact words because they're extremely difficult. They require so much momentum. They really, really do. So the fact that we've done this is not a big surprise to me, and I'm glad that we caught that overthrow move. If you're not in VIP, I have no idea why, except that you're still wondering if you really want to beat the market. I'll invite you to join today. Hit the specific link. If you can't hit the link on Twitter, this specific link here, or join from a desktop computer, DM me on Twitter. We'll work about getting you into the #1 trade group, and we make no apologies about that. Guys all over the world, girls all over the world, you guys are doing great. This is London with Bitcoin Spike, former hedge fund owner, private, non-SEC, not financial advice. Let's go, bulls. Mind your manners on that channel on the way down is all I'm going to say, right? Mind your manners on this one. If we get a reversal, an indication of a reversal pattern, we will be in the back and we will try and catch it like we've caught almost every move over the preceding 2 weeks. This is London with VIP Trader. Take care, guys. Bye-bye.